tripolar world in investing, you can take it from the asset allocation, from the asset class decision to the regional decision, to the country, to the sector, to the company, and it flows all the way through very, very nicely.
But what does this mean for the US equity market? Because I think what you say is absolutely right. If you look at the outperformance over the last 5 years of the US versus just about any market in the world, it's 25, 35, 45% outperformed.
At least, yeah.
But it's sucked in so much capital that if you get to this point, to your point, what we're talking about here, that these other regions are far more favorable, there's going to be a hell of a lot of capital flowing out of the US equity market.
I'm not so sure it will flow out. You have seen relatively robust flows out, but there's so much money around that I don't think it really. You've been able to. You've seen the U.S. market continue to do well. Also, to me, the real question, Grant, is can the non-U.S. markets outperform when the U.S. sells off?
Yeah, no, exactly.
That is the question.
My question
right?
is phrased badly. It was when capital leaves the U.S., whether it be just outright selling or rotation.
Yeah. That's the question.
Do they pick up the slack, or does everybody run it?
That's the question, right? And so you can't really prove that until it happens.
Sure.
But it's to be high beta to a rising U.S. is much less challenging than to outperform when the U.S. is down 10 or 15%, right? If Europe is flat to up, the next time the U.S. has a 10% plus correction, then we'll know for sure we're off to the races. And one of the things that, look, Europe is now kind of a consensus idea, right? 6 months ago it was not. You spoke about how fast things have changed. But to me, it's my call is almost a secular call, a 3 to 5 year point of view, not 2 to 4 quarters. And one of the things that really encourages me about Europe is that so many of the really big pools of money have not moved, right? Most of the big asset allocators, reserve managers, sovereign wealth funds, big pension funds, very, very light in Europe and very, very light in the euro. So it's to me, you have a lot of upside opportunity. And even if, let's say, Italy goes sideways in this next election, how big of a sell-off are you going to have? I think more likely some people would use that to kind of bolster positions because the long-term money, the slower moving money, I don't think has really made its play into Europe at all.
What that does for me is reintroduce volatility into markets, and that's my fear, is that markets get volatile again because we've become so used to not just low volatility but continually declining volatility. And I was talking to someone recently, they were telling me that if you'd have basically just shorted the VIX for the last 3 years, you'd have outperformed every single fund anywhere in the world.
Right.
Which is, remarkable. One of the most dangerous trades you could ever do.
Right.
For 3 straight years is giving you the best performance.
Yeah, and would you have gotten shaken out? I think you probably would have been shaken out a couple of times.
Very
people forget that, hey, we had a horrible quarter in the first quarter of last year.
Yeah, exactly.
It was only 15 months ago. It was brutal.